Hey, thank you for taking the time to click on today's video. You know, this is a public channel, but it's my channel, and the reality is that I get to rant when I want to. And one of the rants that you're going to hear about today is the fact that I think that as a country, as investors, we have completely lost the spirit of investing. What do I mean by that? Well, I mean, isn't the spirit of investing just to invest and then to hopefully see growth? Well, yes and no. The reality is that so many people today have grown accustomed to just randomly putting money into certain types of investment products without really thinking about the implication, number one, and number two, thinking about the purpose. So I keep bringing this up because it is so very vital. As a fiduciary, when I sit down with a person who, say, within 5 years of retirement, and I ask them if they have goals for their money, they're going to say, well, yeah, I have a goal for growth. Okay, but growth for what? What is the purpose that you're wanting to grow this money? Are you wanting to grow it so that you can have a lump sum withdrawal later on down the road? Are you taking and growing this money so that you can have income for the rest of your life to supplement your Social Security and maybe your pension if you have one? Is your goal to just grow this money so that you can simply have a legacy? Well, all three of those are very legitimate reasons to grow your money. But the reason that I say that we've lost the spirit of investing is the reality that 50, 60 years ago when we invested, we did it with purpose. In other words, and here's just three examples. Number one, we invested personally in companies that we felt they represented something that we loved, something that we admired, something that we really wanted to see succeed. That's the reason that we invest in certain things. Like, think about it. Tesla was not the first guy that ever tried to, or the first corporation that tried to bring electric automobiles to the United States. In fact, we can go way back in time, back to the early 1900s, and there was early attempts at bringing electric vehicles. The problem is that he or those individuals, those corporations that were trying to succeed in that particular space back then, they were just bringing the wrong kind of technology at the wrong time. Now, if we are really following certain companies, and we really believe in the spirit of what they're trying to accomplish, what they're trying to bring to the market in the form of a product that's going to be beneficial for human life, for humanity in general, for the earth, for certain developments in certain sectors of the economy. Those are things that we need to track. Those are things that we may want to financially support and have stock in. The second thing that we've lost the spirit in is that of the dividend. You know, the dividend is a reward. That's the reward you get for owning stock in the company and being a true believer in that company. And the reality is that more and more financial products today are diluting your dividend. Did you realize that? You see, you can invest in common stock, and if they pay a dividend and you own that stock directly, you're getting 100% of the reward. That reward is their gift to you as being a shareholder. And yet today, so many products, I don't care if it's an index fund that has so many different companies in it that it's diluting through volume the amount of dividend yield that you get, or it's simply you owning, say, a mutual fund. If you would simply go back to the original spirit of owning stock, number one, buying it because you believe in the company, you believe in their business model, you believe that they got good management, good leadership, believing that owning this stock and that dividend that they're going to pay you is going to be useful for you and your retirement so that you can do fun stuff. Well, that is an important factor. But what is the third spirit? Well, the third thing that I think we've lost is that of true security. You see, today it is more difficult than ever for the do-it-yourselfer to be able to invest in a variety of different asset classes. What do I mean by that? I mean, we're surrounded by information, right? We can go to Yahoo Finance, we can go to Google Finance, we can subscribe to services, we can figure out all sorts of data about stock companies. But what if your goal is that of principal security? What if your goal is that of keeping your principal safe? What if your goal is getting income and doing it contractually? Does that sound attractive to you? Because let's face it, dividends are not a guaranteed thing. When you own stock, they can cut the dividend, they can remove the dividend altogether and not pay us. So do we want that kind of risk? Because that is a risk of owning stock. Do we want all of our retirement assets to be sitting in stocks that could potentially jeopardize some of the things that we want to do, that we need income for when we are retired? If the answer to that is no, then I encourage you to get back to the old-fashioned way of investing, the way that we used to do it back 40 years ago, 50 years ago, 60 years ago, and that's the fact of giving up the bond fund. Give up the bond fund. The bond fund is a waste of time. Why do I say it that way? Certainly it's safer than a stock fund, Matthew. Yes, it is, but it's not beneficial for you. Why is that? Because when you own a bond, when you own it directly, when you have someone taking and doing that work for you where they can potentially even buy that bond off the street, that means that they're buying it more factory direct, to say it a different way. And you own that bond? Well, guess what? You own a contract. And that contract says as long as that company doesn't go into bankruptcy and you own that bond, they're going to pay you consistent income. How much income? Well, you take the dividend that you would get from a stock and you boost that. That's right, you increase it to 4.5%, 5%, 5.5%, maybe 6%, depending upon the price that you get for that bond. And here's the reality. When you own that bond, and because you own that contract, you not only get one guarantee, you get two. What are the two guarantees that your parents and grandparents knew when they personally owned bonds? They understood, number one, that the income that they received was contractual. That meant that they were going to get paid every single year interest that they could rely upon, interest that they could spend. Number two was that if they held that bond to maturity, when that bond matured, they received par value back. Now, what is that? And why is it so important? And why do we not dare lose the spirit of that? Well, here's why. You see, when you buy a bond, that bond starts at $1,000 and it matures at $1,000. So you want to know a little bit of a trick, a little bit of a tip for you to be able to make money even safely? And that's the reality, that if you have someone who's an advocate, you have a fiduciary, someone who's skilled and their expertise is that of income, my job is to buy you that bond for less than $1,000. And what does that do? That sets you up for two things. Number one, that gets you more income because we bought it for less than $1,000. We get to buy more bonds. Your money goes further. When's the last time that ever happened to you? And number two, if you bought it for less than $1,000, when it matures, you get $1,000 back. Guess what? That means not only did you get the income the whole time that you owned the bond, you also made money on the far end of the deal. Now, how many times can you say that you can do that contractually through stock? And the answer is zero. Nothing, nada. So I encourage you, if you are the standard average investor, to get back to the real spirit of investing, being not only objective, but very purposeful in how you invest your money. Knowing that this money over here is set aside for growth and you're taking on risk, but you deserve to get paid the dividend for taking on that risk in that company that you believe in. And number two, that you're investing money that you want to have safe, money that you want to have contractual income from, and maybe, just maybe, even set yourself up for future capital gains by investing in bonds the right way. It's not just bonds, there's preferreds, there's a whole universe of things. But I encourage you to explore and really consider if you're just following the herd in everyday traditional investing, or now if it's time to really amp up your game and get very purposeful and start going after what you deserve, which is growth plus income. I'm Matthew Johnson. Thanks so much for watching this rant. It is a bit of a rant, but maybe you learned a little something. Share it with your friends. Give us the thumbs up if you like the video. And always hit that subscribe button and the bell, and we'll remind you every time we come out with another weekly video. Thanks so much for watching, and remember, it's up to you to make today a great day.